Welcome, it's the Market Sniper. Yep, traditional markets. What a week we had. Man, oh man, anti-fiats melt up. That's right, Bitcoin, XRP, all the other alts that we have some form of interest. In fact, all alts generally. That's on the crypto side. Remember to follow us on the Crypto Sniper for that action, for which there was a lot. But then in the traditional markets, we've been talking about the ongoing precious metals bull, which includes gold, silver, and platinum in our various roles. This video is going to be about silver's day. Silver was the star of Friday and probably of the week, and we're going to show you a handful of charts and remind you of charts that we've covered before with you on silver regarding its potential for upsides. Let's go to those charts. This should be short form, so a quick hit up. Hope you enjoy it. Don't forget to hit the like and subscribe. Also, remember the link below to book a call. Okay, so let's get straight into it. Quarterly from all-time lows. This is the biggest form of silver chart that I ever have shown, and it goes from 1932, where you were around 27 cents an ounce for silver. People forget you actually got stuff for 27 cents back then. And a big flag pole and a big flag projection. Very simple, very geometric. 597, that's right, $600 silver. You'll see a 330 floating there. We'll go down, reduce the time frames, because this is the biggest one. That's a quarterly. Let's be clear, it's a quarterly. You can see how sketched the data was back then. It was just, a lot of fixes and various forms of markets. Wasn't the fullest form of price discovery, but nonetheless, it's of interesting to us. Right, then we start getting into the HVF territories of the price action that's existed here. This chart, as I say, we've drawn many times before, and we'll draw again for you. This is utilizing our draw tool. This is an upside structure. Many correctly actually calling it a cup and saucer. It is, by virtue of technical analysis, a cup and handle, not a saucer. I keep saying that. I don't know. Too many flying saucers in my world, maybe. Nonetheless, what I do want to do is I need to just filter out a slight imperfection in this upside HVF. It happens, you had by the way, there was a 1980 high, and then you're comparing it to a 2011 high. That is 20 plus 11 years, 31 years later. So a slight imperfection is absolutely to be expected, marginally higher on the second high. We want to change that to allow the projections to be accurate for this. So utilizing our draw tool, I will go in there, imperfection, highlight that value. It is 49.81428. 49.81428. 49.81428. Let's measure it one more time so we don't have to do this twice. That high, by the way, that it was slightly less in 80, that's why. It looks correct. And let's take that one out, and we should have our jaw. So it highlights in the red box the jaw, and you can see why there's a 330. So the upside HVF, this gives slightly more reliable targeting than a cup and handle. Let's leave flying saucers out of this for now. Then you would generally, technically, and that points to a $330 upside. So these are big targets that have been generated by big charts and upsides. And you can see also that the volume by price has been very strong and has built up very close to our midpoint of our axis there. We did trigger some time ago. We did a video on this channel when that triggered. It was a key level. You'll see it over here, the RH3, $30. 1.35. You should have been biased net long. If you're a super patient, you should have been in and holding. We are net investors, but on the trading side, we need to see the points where it's going to move quickly, and it has been setting them up for us. So you can see all of this. That's getting a tiny bit busy, so let's just take it off there for a second, and you can just see the jaw. That was the triggering event. We did that video in 2024. You churned around the line a little bit. You had an up and then a downer that turned into a hammer, and you're making or heading for your first interim level, which is that dotted purple line. Very fine, difficult for folks to spot. That's the 41. Now, when we start hitting a number beginning with 4, I think that's 4 fingers, we're going to be in that range where you're at the zone of almost all-time highs. That is the lip, essentially, of the cup and handle, not a flying saucer, there we go, in there, boom. So we'll be getting there. In fact, it's a little bit lower. I haven't drawn it quite low enough. It goes a touch lower to that interim level. So that's a key level. People have got to bear in mind, as bullish as everyone is right now and loving it right now, that is likely to be a level that could be very powerfully defended. So you could get up to 148, 149, 145. Choose a number in the mid 40s, or it could even happen on a Sunday open, this Sunday open, and they could do a not-for-profit Mr. Slammy. Be careful about wading in. There's going to be a lot of attempts potentially to ride this, to prevent what's going to be the eventual happening. So investment is chosen first course. Look at our dealer links below. ITM trading for the US guys, pure gold on the UK side, and you can, and the rest of the world except for Australia, Nigeria, and one or two others with exceptions, have a call with them actually, because it's changing all the time. Unfortunately, tariffs have made some things a little trickier, so you will have to update with them on that. I've purchased regularly from Pure Gold myself, and have been very satisfied. Okay, so here we are in London, by the way. Sunday, not tomorrow, next Sunday, we'll meet up. We'll do a meetup, and if you're a YouTube fan and friend, you're welcome. Send us an email on support@themarketsniper. We will put you on the notification list and inform you of the venue on that date. It will be 12 o'clock midday on Sunday time. So we'll give you all the details, but it's by email request. So please remember to do that. There are forces in the United Kingdom that might intrude. Okay, so tell us what you like about the channel, by the way, in the email, if there's anything you value. It's great to hear, so that we know you're a friend. Let's go back to the silver chart. So that's that draw. Now, what I've also done a number of times with this ascending HVF that has broken out, that we are saying has a $330 target. It's going to speak way more about the loss of value in the dollar, by the way, than many other things. You know, it's a bit frustrating sometimes. You get folks saying, yeah, but the stock market's all-time high, property market's at all-time high, and we have to sometimes, you know, explain that you're actually in a debt and dollar debasement. That is the JPX, which we will show you, but I want to just show you that tweet. More downside for the Japanese yen, by the way, for those that are fans that have been following our Swiss franc JPY trade and are in it like us. Yes, a good one. Let's just show you that, but the market's at all-time highs, nonsense that you tend to get. We did a response on this, and I did a chart while we are giving you a rest before I start showing you the next in the silver chart sessions for the silver bulls. How can the economy be so weak and the markets be at all-time highs? Many are wondering. Well, it's quite possible and quite easy to do if you are debasing. So here's an influencer. The point they're trying to make is the Fed shouldn't cut. The Fed can't. Let's deal with this. The Fed can't really cut because there isn't the demand for the debt. The debt market fell, TLT, go over, look at it, 55%. Now the dollar is having to fall to release this pressure in the debt, and of course the trade deficits, which people are no longer wanting treasury assets for. So S&P all-time high, NASDAQ all-time high, Bitcoin all-time high, yes, anti-fiat, gold all-time high, yes, anti-fiat. That's your clues. Okay, home prices no longer really all-time highs. They're turning down. There's way too much selling stock. But I understand what he was saying. Not so long ago, they were close to all-time high. This is actually about dollar debasement. This is about dollar and debt debasement. And you never get debt debasement without the associated currency debasement. Please understand. A dollar is borrowed into existence. It's USD stroke UST, okay, or treasury bill, etc. The economy is bad. It is bad, and it's getting worse. The currency and debt debasement, TLT down 52% last 4 years, dollar down 11% just this year, is the answers to why assets are at nominal highs. That means the top line number, which isn't being rebased for the currency debasement. Do you understand here what I'm saying? This chart, the first part of this chart over here, shows the Nasdaq. Yay, new high. That is not a melt up. Everyone who was calling for a melt up here, you should have done that and then crashed. Instead, you did this and you came marginally higher than you were before, which is the equivalent of not having the crash and just continuing a walk out to the upside, but clearly, very slowly, but clearly you actually had a lot more volatility and fear at the same time. So the melt up callers are actually saying that should happen and then you crash. In actual fact, we got a part crash, not the full crash, and we got a return to where we were and now marginally higher. Okay, so that is not a win for melt up. It's not a melt up, as I've just shown you. Melt up is the exact opposite. It's where you do that. And percentage changes chronically. Now we're going to take that same Nasdaq and divide it. And I did this by the euro. I did it by a number of currencies, but I thought let's just use the franc because we've been talking on this channel a lot about the Swiss franc. And what you actually see is that high, you have barely regained 55% of that. So the dollar, the loss of buying power of dollar is you're not at a Nasdaq high. Not in buying terms, you're not at a Nasdaq high. In nominal terms, in your devalued dollar, if it continues to devalue, you are just higher than you were before. Just. Now, if we do it in gold, which is the ultimate and truest form of measuring what is the inflation rate, in truth, what you actually find is the last time you were in a Nasdaq high was over here in gold terms, way back in 2021, going into 2022. And in actual fact, you're in a bear market right now. You've had a minor rally, but you're in a bear market right now. And if gold gets its running shoes, rolling skates on, as is expected by the HVF, that we'll possibly give you a quick little look at in a second, then you should continue to go down. So the last Nasdaq high was in gold ounces in 2021. Okay, so that's where you are. Don't be fooled by a nominal shell game by cultists who are debasing everything at a chronic rate right now, including currency and debt. All right, so that little sidebar took us away from our silver charts. Let's head back. So it's the other thing that I've done and I've highlighted is I've said let's pretend their stats are truthful, which they are not, but we will use them anyway. Let's use the consumer price index for all urban folks, and what you'll actually see is on our HVF method draw for this. Let's do that, and we will go 6, no imperfections. That in actual fact, you have only just taken out the third high, which is a break for us, by the way. It typically indicates, so this is the adjustment of the silver price when you take the stats that they use or tell you they use and you should use for consumer price index, and that is it. You have literally just broken. So for those that will say silver is topping out, it's too high value, this is literally just begun, this move. This is your triggering event right over here. Now, these numbers will make no sense to you because you're dividing by an inflation percentage to rebase it for inflation. So this is more just to show you where you are on your flight path in terms of this. Now, we'd expect this vast potential geometric move to be projected right up there and take you to some other value. And who knows what the future CPI AU CSLs will be, but I expect they're going to start heading up soon. And that is very likely, again, to point to significantly higher silver prices. And this is indeed a breakout of once, twice, third high, and now moving higher. So that is very, very bullish for silver. And I want to congratulate all of you that are, silver metal stackers. Well done. Keep stacking. Actually, all you're getting now is confirmation that that long desert walk you walked, and it has been long and it has been hard depending on when you started, is going to pay you in the end. And now the checks are starting to come in, and they actually get bigger and fatter at a rapid rate. So you should continue to stack, and I refer you again to the Pure Gold link in our details below. You can also use Bullion Vault, where you can accumulate and get some of the upside. Then you can put in much smaller amounts, £50. We're in UK right now, or $20, whatever the case may be, accumulate, and then once you've got a lump sum, you can go and purchase a tube, a box, whatever you feel, and have it delivered to you, and you'll pay the same prices that I do, utilizing ITM and or the Pure Gold company as linked below. So Bullion Vault's a great way to start for someone who's new, who's just seeing, wow, all that stuff those stackers have been talking about is actually coming about. This never gonna perform. There's some people that said, oh, I've been hearing the silver guys talking for 2 decades. Eventually things come around, and they are certainly coming around now. So great news for silver, and that's the key thrust of this video. I will also point out to you, as I've just mentioned, that gold was the first mover way back. We gave you the upside HVF here at the 2000 level and said it's going to run 3000. You might remember that forecast wasn't actually that long ago. So gold also, let's just do the same with gold in terms of the big moves, and take some of that off. You'll see a lot of lines suddenly appear here. I think the highest one up top here is in and around the 10,000 mark. All different geometries being projected. Quite a rough cut chart. It's very busy. I understand you won't relate to it. We've gone in, it's a workings, and shows it from its early eras. So much like the 30s, from the lows of the 30s, how far do we go? That is your fixed pricing, which clearly at one point would have been a valid price and then quickly wasn't. And then the fixed pricing, once they confiscated your gold or insisted you brought it in, etc., etc. So it goes. And anyway, so the highest projection target over there is 10,600. But let's have a little look at the charts where we can actually make some sense of what I've done here, because there's so much detail. This was the upside HVF of 2000. We pointed out that this breakout would be the beginning of a sustained move, and in actual fact now, if you were still holding, which you should be doing, you would have an unbelievable record in terms of your risk reward ratio. We have been in and out after the 3000 trade point. In fact, our targets were just below 2.9. We've been in and out on it, but as at an investment level, we've continued to stack. So how we're looking right now, this is the bit I wanted to bring you into, and we've spoken of a 3,700 target to be broken, potentially the 3,750, and that is again the structure that is in existence. This is the Oanda. In fact, I can even choose Tickmill, by the way, we are using below. And if you are not in you can use it from the UK, but if you can do any country outside the UK or the Europe, they don't do America and Australia, by the way, apologies for that. Tickmill is below, but you can also use our SCM or our SimpleFX links and brokers to trade with. You can trade platinum on many of them, while some of these don't have that, so it's a pretty handy option. I wanted to just find the Tickmill broker draw, because I did a little bit of extra work on that particular draw over the Oranda one. There it is. It was quite close to the top. So yeah, what we're highlighting here is essentially once you made the 3.5, So you did the 3, the next key level was the 3.5 before 4. So the thousands are obviously big round numbers. 3.5, you did that, then you had quite a bit of sell-off, and you defined a range that took you down to 3,120. 3.5 down to 3,120. That defined the range. You grind it up, you went to around 3,450. Again, $50 round number, less, and then you define the range a little tighter to 3,250, you know, at 3,247 on the bottom of the hammers. So 450, 250. So you're 120 and 3.5. You can see what's going on here, each leg a little bit tightening, and then you started to get sold off a little bit here at about 3,365, and that's where you got sold off again. Again, a slightly broadening structure to the down leg side. You can see what we're analyzing here. Both of them broke the red level to the upside and did exactly the same here. Broke it to the upside, which is good, and a little bit higher. So you're now in a higher highs, higher lows vibe. So you shouldn't run that low, and you certainly shouldn't run that low. So you might have a little bit of a pullback on the Sunday, but overall you should be making higher highs. We were getting in over here. That represents a 25.9 risk reward on this HVF, and it's still early doors. So gold is good too. Silver has shone last week more than both platinum and gold, but it is gold is setting up for a significant move. Guys, this is debasement. We're getting an acceleration in debasement. Watch out for drills, Pegasus drills here in the UK for PANDEMIC. Anyway, drills often go live, as in 7/7. Yeah, go check out the couple of documentaries on that one by Muad'Dib. Okay, so have a look at this. We're now going to do the draw. For this particular upside, and let's just move our information box somewhere else where it's out the way, bottom left. Thank you so much. Thank you so much. Yeah, so there we go. Now that's a run of a 3702 that I would actually anticipate could probably get you through the 3750, in fact, because you rarely stop directly on the target. There's a danger to that if you get too assumptive. But once you get a bit of momentum, it tends to be self-feeding. So we were entering here on this broadening structure. Why? Because you have 3 layers of sell. You had a layer of sell, you see that with a bit of skid. You had a layer of sell, and you had a sell in between rallies. And we had very similarly a sell, a sell, and a sell. So we're expecting bottoms here. So that was a great picking point, and then you had your stop there on the basis that this is all going to be exactly what we expect it to be, a continuation pattern to the upside. We trade continuation. Keep on keeping on. Keep on keeping on. In fact, there was something very interesting that I saw on somebody else's work. I'm going to try call the guy out. He has a newsletter called Wayne, actually. And it dovetails, and it was very interesting about what it described with regards to winning in life. And one of the key things is, it was a Chinese philosophy, which was fascinating. Just put that in there, and I want to read this to you, and it's not my handiwork. It is somebody else talking about his 3 favorite individual Chinese books that he's read of wisdom. Of course, Art of War is one of them. Let's just see that. I may have it close to hand. I may have to refer back. So here we are. This is the reference. And this is part of HVF method that you will learn when you click the link and you join us. His 3 favorite Chinese books. One of them was called the Tao Te Ching. The other one was the I Ching, and then the Art of War. From the first book, the lesson that lives rent-free in his head is Wu Wei, W-U, new word, Wei, W-E-I, effortless action. Effortless action. That is just flow. In Tao Te Ching, the Tao is the way, or the natural flow. A core teaching is Wu Wei, or effortless action, where more is achieved with less. Allow problems to dissipate or solve themselves. Don't react and try and make better. It's often the reactions that make things worse in many instances. So this is a life philosophy, and I'll tell you how it ties into HVF method in a second. Align with a strategy that is aligned with market forces. Continuation. Don't be always pushing against a dominant force. Go with flow. Flow with the continuation is the bull market. Gold is in a bull market. Continuation patterns, expect continuation. Position in front of the wave, let the wave take you. This is all quite important. This is an example of Wu Wei. Avoid unnecessary complexity. It's a lot easier to make money in business when you're in a growing market. A rising tide lifts all boats. Don't be trying to make money buying the dollar long in the currency markets when it's in decline, neither the yen. Position in the gold markets, the silver markets, and markets where there's flow. So it's kind of, the ant may sprint for its life in any one direction when on an elephant's back. But if the elephant is walking in a different direction, its sprinting will be of no use. So tapping on the natural flow of things make life easier for you to win. And if you want to make money in business, align yourself with people who already have natural flows in their life, and also recognize the natural forces in markets, I would add to that. And what we do is we play our market book according to the predominant long, lengthy trends. So you just feel luckier. You tend to be more accurate more often because we are buyers in bull markets and we are sellers in bear markets, and we continue to be until there's been a clear and distinctive sign of obvious reversal on a long, big time frame, not on short time frames. So, for example, this would not have been a bear market for us. It's a pullback in a continuation structure for further upside. So the anticipation is this is actually a breakout that occurred over there when you ran that third high, which is a qualifying third high. By our methodology, as I say, you'll find out all about that, and you'll watch us implement it with regular updates in our community. When you see that, that's a triggering event. That's where we have the stops located, and that is our target, $3,703, with the anticipation that a bit of overruns likely when you're at 3.5, at the resisted at 3.5. The next point where you might make a technical resistance point, just run and pull back, sitting between 3.5 and 4, probably 3,750. So there might be a little bit more jam in the jar right at the bottom there for you beyond the 3,702. To play safe, targets at 3,700. Maybe it won't. You never know. I'm not in the future. I can't tell you what the future will bring. We just use a geometric, natural, with continuation, with Wu Wei, the wind at our tails, to maximize wealth building in reset times. That's what we're all about. If it makes sense to you, click the link below and book a call. Gold up to 3,700. Silver, the star of last week. By the way, some people will ask, what about the platinum? So it's also worth doing it. People got to bear in mind that there's platinum futures and there's platinum spot markets. So depending who you are watching, you got different movements out of platinum. We feel that there's also an upside HVF here. This is more the spot market. If you look at, for example, Oanda, so just see that. We see 1478 as the next leg up in the platinum market. So I have been talking about platinum, so it would have been remiss not to update. It's still had a decent week with a move up, and it's had the biggest year. It's the biggest mover. Maybe I must check. I think it's the biggest mover by percentage of late, and probably of the year. So let's just have a look at, where's Oanda? There he goes. You can see when you look at the futures, in actual fact, platinum had a fabulous time on the futures, and that's going to come in and affect the spot market as well. And that's the October future over there, so quite a lot higher there. And that move actually on the futures would have equated to the moves we've seen, and even maybe surpassed the moves we've seen recently on silver in the spot market. So always be careful which one you're looking at. NYMEX is typically going to be the futures market on platinum. Okay, so all doing great in the anti-fiat world. We did the diagrams for you on anti-fiat. You know, the king moves first, the subset with crypto in it. By the way, check out, as I say, Bitcoin. It's also going to, we think 150,000 will be the next leg up. Number of reasons. Watch that on our Crypto Sniper channel. There's big movements. Why are anti-fiats winning? Well, our thesis, we created the phrase, by the way, anti-fiat. I've never heard anyone else mention it, but I hope it catches on. And this is the anti-fiat season. This is debasement. This means you hold the anti-debasement asset. And that is gold, silver, platinum. And of course, the digital options that, as I say, I don't trust, but I see will go up and will certainly be part of statism and their new controlling system that they're quite likely to introduce in the future. Until next time, thank you very much for watching. Hit the link below, book a call. You could be profiting like we are in these unbelievable times. Final thing, just before I close, someone will be saying, what about the Swiss franc JPY? You didn't update on that. So the yen weakness, we showed it to you in that tweet. We continue, and this chart I didn't show in the Swiss franc JPN. So what's in the JPYX? That's the equivalent of the Dixie for the yen. It's 4 currencies: pound, Aussie, euro, and dollar. Okay, and what's happening is this looks like it's got further downside to do. We've got a little head and shoulder here that could take it down. Dixie value, JPX value, JPYX value 712. So there's more downside to come for the yen. We feel the yen is being slaughtered to keep the carry trade from unwinding in America, where there's been wholesale borrowing at low rates in Japan to casino buy assets in American casino. As we've already highlighted, your NASDAQ in anything but dollars is probably not at all-time highs, and there hasn't been a melt up. There actually was a 15% crash, to which you've only just reclaimed the previous highs and marched a tiny bit on. So please bear that in mind. Nominal is for fools. This is where you're making your money in the rebasement time. 712, 724 on a flag and on the head and shoulders there. So the yen is weak and is looking to remain weak, and this is just an absolute ripper. We've got a 190 target on this from the bigger time frame that we shared with you, which was on the daily chart way back some time ago, and you can go and see the previous videos on that. That doesn't mean it's over at 190. It just means it's a good place to take profit, at least on part of the position. I would expect there's a possibility the trend will continue after some form of pullback and chop and churn, which could take a while. So we get a progress decay field. Could it be the top? Possibly at some point, and this is where so many people don't understand us. At some point we think the yen reverts and gets oversold and could turn into a violent rejection a la what happened in August last year. So we warn you, this is, whilst the yen is weakening, this is the US dollar yen, whilst the yen is weakening, if it taps out somewhere here and starts to come down really hard, you could have a very violent reversal on the carry trade, which could see the yen strengthen. So we are short the yen now, but we are open to the possibility that there will be a violent reversal on that position at some point in the future. So bear that in mind. Until next time, thank you very much for watching, and don't forget to hit those likes and buttons. You've had an update on Swiss franc JPY, the Japanese index, but most importantly, the star of the week is silver. Silver, go boy, and of course gold and platinum. And keep an eye out for those targets on gold, 3,700 next leg for us at minimum, on balance of probabilities. Watch out for the Sunday opens. Sometimes they can hit on very light volume to knock down, so be very careful with leverage. And until next time, I look forward to seeing you. Remember, this is not financial advice. It's an entertainment channel where we talk about our trades, and we just warn people, if you want to start doing anything we do, it's non-advisory, and importantly, you must have training if you choose to use leverage, and investment should have a financial advisor behind it. Okay, till next time, catch you later. Thanks for watching. Bye for now.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.